everybody, what is going on? Welcome back to another quick CYPRX video breakdown. In today's video, real fast overview of the last 24 hours over the digital asset space, what to potentially expect over the next 48 as we head into the weekend, things you all need to be paying attention to. Please do not ignore this information. Understand why your digital assets are currently underperforming and are not experiencing any bullish momentum as of time of recording this video breakdown. So at time of recording this particular video, the cryptocurrency market cap has experienced a significant decline of over 4%. This downturn can be attributed largely to the prevailing market sentiment and risk-averse mood following Jerome Powell's recent speech via the FOMC statement. Now, if you all enjoy these video breakdowns, giving you guys some insights and educational background and fundamental understanding as to why your digital assets are underperforming, do us a favor, smash that thumbs up button and subscribe. If you want in-depth access to our fundamental breakdowns and our technical analysis, again, you guys can visit CYPRXtrading.com. So, Powell emphasized the delay in rate cuts, underscoring that the fight against inflation is far from over. The Federal Reserve is inclined to maintain higher interest rates for a longer duration and remains data dependent, with no imminent expectations of rate cuts. This stance weighs heavily on risk assets like cryptocurrencies because it signals a less favorable environment for speculative assets. Now, we know that over the past consecutive couple of months, zooming out since pretty much late October 2023, heading into the earliness of this year in 2024, we know that risk asset sentiment, i.e., bullishness in crypto markets, has been primarily driven to this rate cut expectation, and that is all starting to dwindle. And that is exactly why we are seeing markets pull back. We're seeing an uptick in inflation, resilient and strong U.S. economic data, all in these highs, more increased and elevated inflation, increased and elevated U.S. data. And then here in this area, we saw geopolitical escalations and tensions, and then more upbeat U.S. data. Now we're seeing further pushbacks on rate cut bets, and we can see the negative implications that is having on the digital asset space. Looking ahead, the remainder of the week, we have some very crucial labor market data, including unemployment claims, NFP, and unemployment rates, as well as significant PMI figures. Now, these data points are absolutely crucial for assessing risk sentiment and potential dollar strength moving forward. So let's talk about the most ideal and favorable scenario first. That would be a scenario where we hold above the $2 trillion threshold, start to reverse this bearish price action, and flip bullish back to the upside on the total cryptocurrency market cap. So in the most ideal scenario for a recovery in risk assets and weakness in the dollar, we would need to see disappointing U.S. labor market data. This would entail a higher than expected unemployment claims on Thursday, lower NFP figures, and unemployment rates surpassing 3.8%. Poor labor market data typically weakens the dollar because it suggests economic fragility and reduces the likelihood of interest rate hikes. Additionally, if PMI figures fall below the 50-grade threshold, this can indicate contraction in the sector. It would create further sell pressure, most likely on the dollar, as it signifies a slowdown in economic activity, which would most likely equate to a recovery in risk assets, especially if we see dwindling strength in the US dollar. So, in a scenario like that, hopefully we can see a recovery in risk assets. But in my personal opinion, that is not going to be the case. I personally think we are on the precipice of experiencing some more downwards momentum in the digital asset space, give or take, to revisit these previous demand ranges. With that being said, conversely, a less favorable scenario for risk assets, this would be a scenario where we do break the $2 trillion threshold and we start to dig deeper into these previous demand ranges, would be if we saw a stronger dollar and would involve upbeat labor market figures. Now, this scenario would include low unemployment claims within healthy ranges, robust NFP figures, and unemployment rates below 3.8%. If PMI figures also show expansionary readings above the 50-grade mark, it would bolster the dollar and weigh on risk assets. Stronger labor market data indicates a robust economy, which raises expectations of potential interest rates higher for longer, or potentially even considering hikes, i.e., the Federal Reserve. This would therefore drive demand for dollar and most likely lead to less of a demand for risk assets. Additionally, if we see positive PMI figures suggesting growth and confidence in the economy, this would also further strengthen the dollar and dampen enthusiasm for risk assets like crypto. So keep in mind scenario number one. If we see higher unemployment claims, lower NFP figures, higher unemployment rates, and downbeat PMI figures, we could potentially see a bullish recovery in risk assets. If we see the opposite, we see lower unemployment claims, we failed to correct some of this previous bearish move, we see higher non-farm payroll reports, and we see lower unemployment rates, signaling strength and resiliency in the labor market, coupled with expansionary PMI figures, anything above the 50 grade mark or above previous readings, signaling strength in the US economy, I could most likely see the cryptocurrency market cap depreciating further in value, breaking below $2 trillion, potentially coming back into this previous demand range at roughly about 1.9 to 1.8 trillion. So let's just pay attention to these fundamental factors. Real quick video breakdown, giving you guys the inside scoop. Pay attention to these things. Remember, you can track all these fundamentals on forexfactory.com, or you can just follow us on X and on YouTube to stay up to date with these ongoing developments. As always, many blessings to you guys, and I'll see you all in the next video.